Guys, how are you doing? Woohoo! It's the afternoon session. The sugar levels are low. Concentration is mitigated. But we're talking about something very exciting, aren't we? NFTs. But more importantly, we have a very eminent set of panelists here. So let me give a brief introduction to them. I'll start with Ali to my very furthest right. Ali is an entrepreneur and visionary with a remarkable impact across the tech landscape, from blockchain and AI to education and fintech. He's a managing partner for the Blockchain Founders Fund, a venture capital firm that's dedicated to nurturing startups in the blockchain industry, and he collaborates with a lot of institutions like INSEAD and the United Nations, while also championing the social sector improvement and bringing a lot of valuable insights into the business world. Tone is a former Wall Street professional turned Bitcoin educator and independent content creator. A wealth of experience, he's made a lot of contributions to the crypto and blockchain community, from documentaries to organizing conferences, some of them you might have attended, like the Financial Summit in Bali, Dubai, and Zanzibar, Understanding Bitcoin in Malta, and Unconfiscatable in Las Vegas and Miami. Marsha Lipton is a highly accomplished Wall Street executive with more than 2 decades of trading experience, including MD at JP Morgan and the co-founder of the hedge fund Thor Capital Management. Again, a remarkable versatility in the financial sector. So thank you for all joining us here. I grew up in India as a child, and one of the stories we heard as a child in the politically incorrect world was 7 blind men trying to describe an elephant. In the politically correct world, that would be 7 visually challenged people trying to describe an elephant. And each person grabs a different part of the elephant and they describe what it is. And one person says, hey, it's tiny and bushy. Another one says, it's this long, elongated stuff that's moving, that's kind of partly slimy. Another one says it's massive because he's grabbed the leg. One person is trying to scale it and says it's like a mountain. So the discrepancies are so varied because it's the same entity but 7 different descriptions. So with that in mind, I'd love for you guys to describe your version as holistically as possible of what NFTs are. Ali, we'll start with you.
Yeah, absolutely. I'll give it a go. So the way we look at it is that it's the first way in human history to track ownership in a digital world. And so now, if you think about anything like, collectibles, I used to collect all sorts of things as a kid, from like Pogs to Magic cards, etc. I mean, now this is the first way to actually track authenticity, in a digital form. And as we move into a world where we spend more and more time, 30 years ago, we probably spent less than 10% of our time in the digital world. And now you could argue people are spending 50, 70, 80% of their time in a digital world with their phones and computers, et cetera. To us, it's an inevitable movement where this is critical, at the center of that.
Fantastic. Yeah, I see those videos with kids who go to magazines. These are physical magazines. They're trying to zoom into it because they're so used to taking a picture and zooming into it. So, Tone, your comments, please.
Sure. I'm going to be a little bit on the other side of that explanation. By the way, that question is even more interesting when you're trying to define what a blockchain is. But we're going to focus on NFTs. To me, an NFT is a digital representation, but I'm still struggling with the blockchain and ownership aspect of it. I've used NFTs all the time. My airplane ticket on my cell phone has always been an NFT. It is something that only I can use. I may be able to transfer it to someone with exactly the same name, and they may be able to get on the same flight that I purchased because the name matches. But where I struggle with NFTs is there's nothing wrong with NFTs, except the claims that it's actual ownership are always very, very lofty. To me, the only blockchain that has ultimate finality is the Bitcoin blockchain. So any NFT that is not linked directly into the Bitcoin blockchain, I will always question it technologically as to how long that ownership is going to last. Many NFT projects literally get anchored into someone's domain. So the day they forget to pay their ISP bill and their http.com expires, the ownership of your NFT will actually disappear. So once you anchor your NFT into a blockchain that is here to last, Bitcoin or a Bitcoin second layer, now there are use cases, but now I struggle with, why does an NFT have a collectible artist value in real time? I can understand why a piece of art goes up in value, but a picture that you generated in 5 minutes yesterday worth $1 million today, I'm struggling with that collector value. I always struggled with it. I think that market has topped, and maybe some real use cases will come out of it. But as far as there being digital collectibles that appreciate in value, I'm still a little bit skeptical on that side of NFTs.
Okay, lots of contentious points that we'll pick up on later. Marsha, your description of NFTs?
It's much easier for me. It's much easier for me to speak after those two gentlemen. But I think, well, first of all, let me ask you a question. How many of you invested in NFTs? How many of you dealt with NFTs? Not many. Okay, so I had many conversations staying outside of this room with people. I think there is a big confusion here what NFTs are. From what those gentlemen are saying, NFTs in the end of the day are just the ownership token. So where this ownership token belongs to this blockchain or that blockchain, or what's your relationship with the blockchain, it's a different story. But the NFT per se is just the ownership token. Very often people confuse the image which they receive with NFT, where it will be artistic image or the image of the ticket or something else, any sort of IP content with this, they call it NFT, and in fact it's not. This is just a digital file which comes with the ownership token, which is NFT. So that's very important to understand. So that is important to understand why, because we had the first wave. It was sort of very inspiring. It was the rising tide which lifted all boats. Then we had the falling tide, which obviously sank all ships. Now we are preparing ourselves for the next stage of this journey. And we need to understand what went wrong, if something, and how we will move forward. Where is the real content? And for that, it's very important to understand that there is an image or IP content, and there is an ownership token, which is NFT, non-fungible digital token.
So given that, like if you put that into context, if ultimately it's about ownership or it's about a title, it's about artwork, you would think that a digital representation of title would actually have a lot of value. And yet, if you look at what's happened in the market the last 2 years, the values have dropped. Now, some of that is down to the base token that is denominated in. So if the price of Ethereum falls, the value for NFT falls. But even pure, just looking at sort of DApp radar just before this panel, the total amount of volume by value the last 30 days in OpenSea is about 50 million, right? And that's about a quarter of the market. So you're looking at about 200 million. At best, it's probably going to be $1 billion in the quarter, which is a fraction of what it was 2 years ago. So if it's so ideally placed, and leaving aside for a minute whether it's Bitcoin or ETH or Polygon or some other network that it's on, why have we seen this big disappointment? Because you would think that a digital representation of whether it's a collectible or a Major League Baseball or new artwork should have continued value.
Well, no, I don't think it was ever a disappointment. The hype everyone just got on the latest hype. It started with Bitcoin, and then it was similar to proof of work tokens to Bitcoin, like Litecoin and others. And then Ethereum launched, and then it was ERC20s. That was the 2017 bubble. After that came the DeFi stuff, then the NFT stuff. And it's just, everyone keeps trying to find the latest thing. It should have never gone up to that height. So now it's coming down. I still think every NFT is grossly overpriced. So I don't think it's a disappointment. I think it's coming back to reality.
Yeah, I mean, I'll jump in. I have a pretty different way of looking at it. And you're right that it's corrected a lot. I mean, even going back, let's call it January, February this year, I mean, you had about 1.7 billion a month in volume. This month will come out to about 284 million. And that's a big problem. And I think a lot of it, does stem from, you had all these JPEGs and other NFTs that didn't really have any real value. And then you had some of them that, you had these sort of PFPs or profile picture sort of ones. You probably have heard of like Bored Apes, things like this. The company behind it went and launched a bunch of other collections. And I think it also saturated their market, because even though it was scarce on that one collection, if you then launch a bunch of other ones, the whole thing sort of stretches your current, let's call it like art holders or whatever you want to call it, right? Or art collectors. But I do think that we're still looking at NFTs incorrectly to some extent, right? So we're looking at sort of the first iteration of it. It's like if we were looking at, I don't know, even AI, 20 years ago, 15 years ago. I mean, it's right. And so I think we're still looking at the wrong part. And so when you start attributing like essentially IP rights into an underlying digital, item, which is essentially an NFT in this case, like it does actually make sense. And the value derived is going to be based on the IP that's going into it and then the royalties associated with it. And so there's things like that. I think when you look at gaming as well, gaming's had its own correction in the Web3 space, primarily due to broken economics, in our opinion. But you are still seeing value. Like if they do have economics, like there is value in it. I can give you an example. And it's not a huge number or anything, but in the last 10 days, one of our companies, Splinterlands, launched a new set of NFTs and they sold 1.2 million in the last 10 days, right? It's not a crazy amount, but like there is still a market for it because people want to own this to play the game. And then they're essentially going to be able to earn off of it by renting it or earn in game, et cetera. And there is still value to that. Right.
So taking those two strands together, are the NFTs then something with intrinsic value that were just hyped up before? Or was this a speculative investment instrument that people popped into to see if they could just ride the wave and have the greater fool theory come into play?
I think we're still, because I think NFT is it's like a shell. It can be so many different things, right? So it can have IP into it and then it's derived by the value of the IP. It could be based off of like game assets and it's based off the economy of the game and the success of that game and the demand of it, right? Like, I mean, there's traditionally in games, I mean, even growing up, I played a lot of different games and you'd be able to sell the gold in those games or sell the items, but oftentimes you're violating terms of service because the companies didn't want you to sell them and so your accounts get banned. I mean, if people are familiar with like Steve Bannon, not a great reputation, but he made all of his money off of World of Warcraft gold, right? I mean, like there is markets for these things, and it's why hundreds of millions and billions of dollars get spent in all of these different games. And if you actually create an economy off of it, there is then value to those underlying items, which is great, much greater than the annual amount of those purchases currently, because you turn it into an actual asset.
So Marsha, given Ali's comments and Tone's comments about this, why aren't people buying NFTs if it's got intrinsic value?
Oh no. Well, first of all, I didn't say that.
No, you said there's no one buying, right? So.
Well, let me just put it this way. To me, this first wave of NFTs, which I'm sort of not a big fan of, but I think it was a very important step forward because it really revealed issues which we need to resolve for future generations of NFTs. Or we will see how we're going to call them, but I would call this as a sort of the crisis of authenticity in the world of abundance. So, you buy, for instance, digital artwork. It's a digital file. Everybody can copy it. And they can mint it on another blockchain, say, different blockchain, and that's actually what is happening. I'm kind of, the student of science. 2 lives ago, I was doing physics, and whether you like it or not, the result is obvious. 85% of NFTs on OpenSea are fakes or clones. So that is what it is. So everybody can clone this. We need the authentication mechanism for IP, where it's artwork or something else. And that's where I think the focus on the next generation of digital images, my company, my startup deals exactly with this issue. And for the artwork, we even coined the sort of abbreviation NFDI, non-fungible digital images, where NFT is just the ownership token and we authenticate the image itself. Okay, so that adds one more dimension. That is a big step forward for the whole sort of digital space. That is the way to tokenize art, whatever you want to do, real estate, financial documentation. So it has sort of huge applications for this, but I think this is the missing link. And without maybe the sort of this first hype and sort of flowing back, we wouldn't be able to realize
So
that.
what you're saying then is that it's not necessarily the NFT, it's the authentication and provenance behind it that needs to be validated.
Exactly. So once again, that's what we started with. NFT is just the ownership token. The ownership token, and sort of you link it to the image or to the IP, but it's not enough. So you really need to have this immutable linkage.
Otherwise you get fakes and you get 70% inertia
That
in
is
wallets
correct.
today. Ton, you
I
have a
would,
different
I
view.
would, just 1 second. I wouldn't sort of talk about like prices. Should they go up or down? You know, I've been in financial
Yeah, we'll
markets
come back to that in a
long
second.
enough. So this is not the point. The point is the sort of the content. The content is the, once again, we should try to resolve the issue of crisis of authenticity. So we need to bring it in, and that's what I think will be there. Sorry.
Right. No, that was well stated. We're on a very similar page. And going back to, again, what is an NFT? And the question was, what is its intrinsic value versus extrinsic value? And I questioned, I have one example of where the extrinsic value can actually be valuable and you do need authenticity. The intrinsic value, like embedding some kind of a IP into an NFT so that as the NFT gets used, let's say a song, like a song would be tied to a digital token every time that song is used on the internet digitally. There is some kind of a payment, a micro payment that goes through and uses the IP, but that's intrinsic value. Like it shouldn't, like that song, there's no reason to have only a limited number of those songs. And who cares? Even if the artist has a digital signature and you own one of these 50 songs that was digitally signed by the artist, you're still dependent on the artist's honor not to digitally sign another 50 copies of this digital song. There is no technology that enforces the scarcity of any NFT. And that's what everyone needs to understand. The only technology we have in the world that enforces scarcity is the Bitcoin network. Nothing else. That's why you see the word unconfiscatable behind me. It's the only asset that is unconfiscatable if you know how to protect your private key. For those that know what a private key is, it's like your password. You protect it, your Bitcoin is unconfiscatable. Nothing else, not your house, not your land, nothing. Only Bitcoin, because you can store it in your head. Now, when it comes to NFTs, assuming the technology is on top of Bitcoin, now you can make the argument that this digital token that's tied to an NFT is actually pure ownership, and nobody else can take it away from you, assign it to someone else, because I personally don't believe in the technological claims of ownership of any NFTs unless they're on top of the Bitcoin network. Now, they could have some intrinsic value for use cases, but what gives it extrinsic value? What makes it valuable? So my best example is because it needs to be in the digital space. Nobody needs scarcity in the digital space if we have it in the physical space. Let's take the Mona Lisa, the most prized painting. It's owned, I believe, by a Saudi family, and it's at the Louvre. If the Saudi family and the Louvre make a public statement that they will create 50 digital representations of this painting, and they stick to the honor of that word, and someone like Elon Musk buys one of them and puts it in his virtual reality office that's on Mars, virtual reality, Elon Musk's office. And everyone has to go into this virtual reality environment for a meeting with Elon Musk with their glasses. Those glasses would authenticate that this is one of those 50 copies signed by the Saudi family and the museum. And that kind of a digital art in virtual reality may actually have some extrinsic value with scarcity, but that scarcity is still not programmatically enforced. It can't be, because the Saudi family could always issue more.
So this is really, we got about 10 minutes. I want to keep the discussion going, but also kind of wrap things and resolve the various strands we've had here. So assuming that we've gone to this classic crossing the chasm scenario, right? This very early euphoria, heightened expectations, almost an irrational exuberance in the market. saw the hype cycle. Now it's a downturn. You've got the flight to quality. Some projects, some companies, some tokens will make it across to the other side. So we're looking at the other side now, right? And this is what we're inheriting. We're inheriting a concentration of perhaps the top 50 products and NFTs holding a bulk of the value. There are a whole bunch of tokens that have no value, and we can question whether that's because of Bitcoin's scarcity that's not being applied because they're using other protocols. And then if you look at the theme of this discussion about the non-fictional future, where are the real use cases for this? And how do we expand beyond the common expression of NFTs as representations of artwork to other things, whether it's medicine, whether it's retail, like the Ray-Ban glasses, which I think is a bit of an extension of what you're saying in terms of being able to get tokenized imprints and objects and see them in your vision. And what do you see as the next wave coming through that will actually create this real intrinsic value and not a speculative bubble?
Yeah, I can give you some examples. I think we generally believe that, real, innovation happens at sort of the intersection of like multiple technologies, right? And so right now, at the intersection of AI and blockchain, there's been, I think, quite a few interesting things. So I'll give an example. We're the first investor on the founding cap table of a company called Altered State Machine. And we backed them originally in 2019. And the idea behind this was essentially to create unique characters in the digital world, which is actually an NFT. And you can think of it like DNA. And so like each of these characters actually evolve uniquely with AI, and they're actually GPU trained. And recently we launched the first AI football league with FIFA. And it's been a massive success. Company's done really well. We just raised, as part of Futureverse, it got acquired. We raised 54 million just pretty recently. But I think that's like a really cool example of something that people hadn't really even thought about, like AI in video games and how can it apply. And we think there's a whole world of possibilities.
So again, what was so unique about it that wasn't possible before the play?
Every character is actually like uniquely trained, and it's actually AI. It's like, so the AI is doing all sorts of things that it's training and learning in real time, and then different characters in the AI actually have, it's like DNA. So they all have different characteristics. They all train different abilities at different paces. And so I think it's like quite interesting. And you can think of it even like NPC characters or, computer characters in games, and now they can be owned and trained and, potentially create a whole set of opportunities and different gaming experiences or unique gaming experiences.
So can you see smart NFTs where you have cognitive abilities through AI? Is that what you're going to say?
And so this would be a good example of this, right? We've got another company called Breshna. And basically what they built is the world's first text-to-game engine. So anyone can basically type anything and it'll build you a hyper-casual game in one of the templates that they've built. So you could be like, hey, build me a Super Mario game with unicorns and aliens, and it'll build it for you in 30 seconds. And it's been blowing up, right? 200,000 games created this year, 3 million unique clicks in the last month. And, there's a lot of value, and you can now take that, and it's not just gaming. You apply it to, say, education. And now you can teach kids or training in corporate environments with games that are made really easily, and it's much more engaging. But then you can even monetize this content. And so you can now access, every third grader in the world or every sixth grader in the world. And so it starts to, I think, open up a whole world of possibilities.
I'll be quick. And look, there's lots of applications for NFTs. It literally stands for non-fungible token. Like my example of your movie theater ticket on your phone or your air flight ticket on the phone, or what was just described in gaming. But what I try to express to people is speculating on value of extrinsic value, that this is some kind of a collectible, I think is very ill-advised. There's lots of technological applications, but speculative value, because infinite amount of non-fungible tokens is not scarcity. So trying to gamble on the scarcity that this NFT will rise in value, I think is not a wise investing decision, in my opinion.
So scarcity creates premium given, but you also had a more somewhat contentious Puritan view on Bitcoin being the base. What would you say about Starbucks doing their NFTs with Polygon? That seems
again, the technological base being Bitcoin allows you to claim that this NFT will actually have pure ownership, that you own it and no one can alter a piece of data in the database to take it away from you. But just because something is technologically sound doesn't make it a good investment decision. So those are two completely separate things.
So if you had a voucher, which was then NFTized, which had a utility value, would that qualify under your definition for intrinsic value?
Sure, but the intrinsic value, again, the intrinsic value of my airplane ticket on my phone is the ease of use and not have to walk around with a piece of paper. It's awesome intrinsic value, but how much is it worth? Like maybe a cent or two? Sometimes I'm willing to pay, I know some airlines in Europe, it's like, oh, you have to pay $10 if you don't have a physical piece of paper, right? Is it worth $10 not to print out your piece of paper? Maybe, right? So it's very, very limited. I just don't see digital art having any kind of real value, again, unless it's only in the 3D world environment and it doesn't have a physical component at all.
Okay.
And actually, I would respectfully disagree.
Great.
Because, I kind of understand this is kind of all or nothing approach with Bitcoin, but in practical life, where we always live, sometimes good enough really works for most of the cases. And from this point of view, as I said, the next wave of digital art will have authentication, real life authentication, which will create digital scarcity. Here I completely agree with you. Without digital scarcity, there's no price. In the end of the day, artwork is worth as much only because it's just only one or two, if we're talking about limited edition. So I think we would be able to create sort of a new monetization, if you will, stream for museums, for artists who, by the way, with grand promises are completely left out of the picture. So because everybody can just copy this digital file. So if it's authenticated and if they can, once again, create a limited edition series for galleries, for museums, exchanges between different museums of digital art, which will, in the end of the day, democratize art, fractionalize art, tokenize art. So far we're talking about art, but the question was how we're going to go beyond that. Art, collectible, luxury, I kind of put them on the same side. It's the supply chain. And in the supply chain, once again, I'm not arguing that one size fits all or nothing. It will be different solutions for different parts of the supply chain. High volume, low price, low volume, higher price, something in the middle. But certainly those solutions will come eventually from the art world and sort of this, say, NFT. I prefer, as I said, term NFDI, because we're not talking just about the ownership. We're talking about the digitally scarce, authenticated images. So, and that's what I think is the future. Once again, different. I think one of the sort of fundamental mistakes people are making, they're trying to find one size fits all solution. And
but what governs digital scarcity in the NFT world? I understand what governs Bitcoin's digital scarcity. I understand why there will be only 21 million Bitcoin. I fully understand why. But I don't understand how an NFT can be provably technologically digitally scarce. I don't get it.
It could be done with oracles taken from the outside of the blockchain. Yes, it's not going to be intrinsic to the blockchain, but once again, as I said, it could be good enough for this solution to be viable and usable. So yes, I agree with you. Bitcoin solves all the problems at once, but it doesn't really mean that it will be done through blockchain.
I'm going to give 1 minute to the audience. Very provocative discussion. Any questions from the audience? Are you all becoming NFT converts now? You're going to go by?
We got a question right there. And there. Go ahead. No, go ahead.
Yeah.
You should get a mic. Someone should be walking around with a mic right there.
Coming to you.
We all know that Bowie bonds and the types of securitization that has been around for quite a while. So the application of this securitization basically depends on the underlying asset, whether it's valuable or not, whether it generates revenue, et cetera, right? So how these old applications to the IP, such as film rights, such as copyright, such as music rights, are relevant to the current state of play in the NFT world? Thank you.
I mean, I think there's a few different things here, right? So I do think that there's an angle around closer fan engagement, which is a sector and it does actually work. Now you're creating potentially certain digital items, et cetera, related to certain drops. Maybe it's like, you know, the 500 VIPs at a concert or whatever. And those are still memorable, right? And I think certain people would put value on those. I think there's an entire other angle around, for example, creating, I think as Tone was saying, like the music piece, but it wouldn't be like creating a song that only has like 50 copies. It would be like one that's an NFT that then like, it's essentially just like a governance play. And essentially you could think of it like almost like a security, right? But it would essentially be like anyone that plays it, the royalties would go into it and it would be split by all of these holders, right? But it would be a security. Like in our opinion, like NFTs, some of them can be securities, some of them don't have to be securities. It just depends what's actually in the vehicle, right? So
We're a bit short on time, but yes,
regulation will be.
But I think even the regulation will look at NFTs as many different things. It's not one thing because it depends what the underlying piece of the NFT is. Like, is it IP? Is it like security based assets? Is it, you know, is it just like in-game assets or collectibles? Like they're all applied differently. So an NFT isn't one thing.
Fantastic. So we got 30 seconds for you, then Marsha, 30 seconds, and we wrap up. We're already over time, so.
All right, I'll try to comment real quick. This may not be an NFT answer, but in general, if you own a club, right, there's regulation there. You would have all your digital music files, and you have it's all digital, and you have an account of, let's say, $300. And every time a DJ plays a song digitally, in that digital song, there are copyrights embedded in a digital file, and it automatically draws, let's say, $1 from your pool and splits it based on which copyrights are in the digital file, and it goes directly to the person that's keeping a piece of the intellectual property. Now, this is just the latest technology. You can call it NFTs, we can call it AI, we can call it whatever. That's a real use case for the latest technology by embedding IP into digital files.
Fantastic. Marsha, you just want to pull the mic closer to you.
Well, once again, as I said, there is the issue of authentication of digital images or digital files in general is probably crucial to this. And there would be different technologies. You know, I don't want to say it will be just one technology. But whatever it is, you know, the regulation here would play big role. So I can't give you an exact answer to this simply because there is really no regulation which governs sort of the state of affair. But they're working on this, and we have to help them as well. So that would be sort of the feedback loop from the solutions which come to the market to the regulations, as well as regulation will affect those solutions.
Fantastic. Well, with due thanks to Raha and the team, and due apologies to Harry because we stole a bit of his time, but hopefully you get that from us after. I just want to wrap up by saying I think the beauty may actually lie in NFTs being the elephant, not necessarily in the room, but the elephant. Because its beauty lies in having those different interpretations, and the totality makes it valuable. So it is a utility, it is a royalty-bearing instrument, it is a scarcity holder of value, it does have trading ability, and if it had only one but not all of them, it may not be as valuable. And if I remember, elephants are valuable because they're scarce, but let's make sure they don't get endangered, because then we're really in trouble. Thank you very much.
Thank you.
Thank you.